pass the mic to Jamie, right? Very quickly, Jamie will just cover, in a nutshell, what are actually structured warrants, right? How do one use it? How does it work? All right, and then Jamie will pass it back to me to cover the Singapore banks, and I'll cover like DBS, which is the first one. All right, so Jamie, back to you. Go ahead to cover what exactly are warrants.
Okay, so I'll just quickly and simply describe what are warrants and why would you even use them? Why even consider? Why not buy the shares directly? Okay, so I'll just give you the quick theory of it. Essentially, on the market, there are two types of warrants: a call and a put warrant. Next slide, Joey. Essentially, a call warrant is one that you will buy if you think that the stock will trend upwards in the short term. And if you think the stock will come off in the short term, whether or not you want to hedge against the downside because you are holding on to a portfolio of bank shares, or simply even if you're not buying or a shareholder of any of the bank shares and you simply want to profit on the downside, which is entirely possible in this very volatile 2025 that is shaping up. In this case, you can still buy a put warrant. So you don't actually short the shares, you don't sell anything, but you buy a put warrant. Some of you who could be option traders at this point are thinking, oh, then what's the difference between a warrant and an option? Two slides. Next slide, Joey. Next one. Yep. So for those of you who are familiar with options, they are essentially the same concept. Why? Because warrants are a form of options. Now, what is the key difference? The key difference is that you cannot short a structured warrant. You cannot short a call if you wanted to be bearish, whereas for some people, if they were bearish, they would short a call. Some people like to write an option because they think, it's great that they can collect a premium. But because they can short an instrument, actually any instrument for that matter, when you short an option, your downside is unlimited, meaning your losses can just roll and snowball. Hopefully won't hit at 740,000 that Joey's ex-client did. But in the case of warrants, that would never happen because the worst case scenario is that you lose 100% of it. And 100% of it can sound very scary, but because warrants are priced very cheaply, they're typically less than 10 cents, the amount of capital that you place up front is actually very little. So 100% loss in a warrant could actually be less than a 10% loss in the underlying shares, itself. That is the main difference between a structural warrant and options. Obviously, the other difference is that the reason you can't short a warrant overnight is because it's a security that's listed on the SGX, right? So no instruments that are listed on SGX can be shorted overnight, in which case you will be subject to the buy-in market, right, to cover that short. With options, you can is mainly traded on the OTC, and they do not necessarily have got designated market makers such as Macquarie, who will be there to provide the bid and offer quotes as well as bid and offer volumes for you to trade in and out for. And finally, structured warrants are cash settled. Everything is cash settled. You don't take physical delivery of shares, whereas with options, there is the possibility of taking a physical delivery of shares. Okay, so that's the main difference. Going back to warrants, previous slide, please, Joey. Next one. Yeah, press one more time. How can you identify warrants listed on the SGX or on your broking platform? So warrants are traded on the SGX. And how do you transact them? You basically buy and sell them as you do shares. So again, if you're interested in buying DBS shares, you go to your broking platform, right? And then you type DBS and then you buy and sell. Now with warrants, you mainly need to type in that 4-digit alphanumeric code. They're all unique, so there is only one instrument that's MMGW, for example. There's only one DBS put warrant with 1Y3W, for example. You type that in and you buy and sell away on your brokerage platform as you do with shares. You don't transact through Macquarie because we're not a broker. We are just a warrant issuer and market maker. As we progress along, some of the other questions you might have is, how are warrants different from the other products that you might have heard of, where there's an option to long it or to short the instrument and obtain leverage. So Joey, you've got to click to slide 18. Just now you saw on the pictures, Joey, obviously he's a top TR for CFDs as well. So how do they compare? Well, there are unique features with warrants that are very similar to options. For example, time decay, which is the holding cost, which exists for all the products. It's just that in the case of warrants, it's called time decay. And there's the optionality called implied volatility that can impact the price of the warrant. That's something that's quite unique to warrants. And with other products such as the DLC, they have different unique mechanisms such as compounding and airbag and all that. I will not elaborate on that because this is a session on warrants. But the point is, the product is unique in its own ways, yet similar. So it provides leverage, just as CFDs do, just as DLCs do, and in fact, when you buy stock or margin. However, the difference is, with warrants, we have various leverage factors or different effective gearing to magnify the move in the shares. So there are warrants that will magnify the move in the shares by 2 times. There are those that magnify it by 8 times. There are those that will magnify it by 20 times. So there's something for every type of risk profile and the confidence of your view, right? The more confident you are, probably the higher gearing or leverage you want. Whereas, a product like DLCs, they're fixed leverage factors where it will just magnify it by 3 or 5 times, etc. For others like CFDs and buying stock or margin, really depends on your margin requirements. More importantly, last of all, it is traded on the SGX. It is a listed product, so it's not traded on margin. So you can sleep well at night. You can put your stop losses so that you would never end up in a 100% loss situation, which typically only happens if you held the warrant until expiry. So this session would also be teaching you on why and how not to hold your warrants until expiry, and in fact, trade out of it, take your profit or cut losses based on your target view, your target exit and the cut loss views on the underlying shares itself. Okay, how do we find a warrant to trade? These steps will be elaborated shortly, but just very quickly, the broad factors, we typically summarize it to 4 factors in the way you should select a warrant. First of all, you must always have a target entry and exit level on the underlying itself. So you buy a warrant because you are interested in taking a view on the underlying, right? You have a view on the underlying. And the warrant is just a means, a way, a tool for you to get leverage in your view. So to magnify your view and your potential returns in the underlying, whilst costing, at a small amount of money at a small capital outlay. So ultimately, your first step should be having a target entry and exit view on the underlying. And then second of all, you need to know your holding period. You need to be very clear on that, because that's the one way where you don't end up losing 100% of your money or a big magnified loss that you're not comfortable in managing. There are different forms of gearing. So that's step 3. You choose something that's more in line with, the risk your own risk profile. So everyone really likes growing their portfolio by 200%, but are you prepared to lose 50% of your returns via this warrant if your view was wrong? And then finally, we always pick an instrument that's traded on tight spreads. So I won't go into detail in them, because I think in order for us to even know how to select a warrant, we must first have step 1, which is forming a target entry and exit level. And for that, I'll leave it to the expert Joey, who will take us through the target entry and exit and cut loss levels that he sees in the Singapore banks. Joey, over to you.
All right, thank you so much, Jamie. I think it's a very, very good introduction of warrants, right? Not to worry, guys. If you have any questions later, that's where you can ask. I think it's very interesting because after going through this stock, right, on DBS, that's where, you remember the first step that Jamie said, right? You want to take a view of DBS, what's your target, what's your entry, and how based on this view, right, and then how you're going to select the warrant. Not to worry, right? Jamie will definitely cover that after I talk about DBS. Okay, so let's dive into DBS right now, right? DBS Bank, I think all of you know, and you can see that this is the chart right over here. And as I mentioned, right, I have this strategy I call the one good trend strategy. So based on this strategy, which is the framework of the indicator that I have, right, I can have, I can turn on in a matter of seconds, right, bullish and bearish signals on the chart. So this is a blank chart. You can see most people just look at a blank chart like this. You get confused. You have no idea what to do. But let me go ahead to just turn on, right, the 1GT Pro, the Pro indicator, the buy and sell signals. Let me just turn it on. pump, right? And there we go, right? In a matter of seconds, you can see that we do have some pretty good bullish signals in DBS. That was in last year, February, another one in March, all the way up. Of course, if you get bearish signals, not so good, it starts coming down, all right? Another bullish signal went up, all right? Bullish signals in October, November, there we go. And yeah, a bit of a bearish signal in January, came down or moved sideways a bit, but let me go ahead to share with you, over the past, I would say, I think past few days, or maybe just today, right? We got a new bullish signal coming out, right? We got a new bullish signal coming out. So let me just go ahead to maybe just turn on one by one to explain to you very quickly on my take on DBS. So I just turn on what we call the moving averages. All right, so you can see right over here, right? Okay, let me just maybe just turn off the signals first. So what we're going to do for any single chart or any single stock is that, before we even talk about buying and selling, right, we want to always be in the same direction as the trend, all right? Based on this one good trend strategy, we want to know what is the longer term trend first. So the longer term trend takes into account the trend of the stock over like a 6 months to a year period. So we want to be in the same direction as the longer term trend. And how do we know whether the longer term trend is up or down? Well, essentially you can see that we have this 100 days moving average, this red line, and this blue line is the 200 days moving average. So if the red is above the blue, and both of these two lines are pointing up, then we are in a longer term uptrend, right? So we must want to think about taking trades that are aligned with the longer term uptrend. So you can see DBS has been in a longer term uptrend, not just last week or last month, but since beginning of last year, right? When the red and blue lines, they're flattening out and then they started to pull away and both started to point up. Does it make sense? All right, so that's where the longer term trend has been up. Let's take a look at the next thing, which is the short-term trend, right? So how do we tell the short-term trend? Well, essentially, we have covered the red and blue, right? Now we can cover the green line. So you can see this green line is what I call the 20 days simple moving average, right? So when the green line starts to point down, they're not so good. It means that the short-term trend is down. Right, so we don't want to buy when the short-term trend is down. We want to buy when both of them are up. Does it make sense? Right, so you can see it starts pointing down, you wait for it. All right, wait until it starts to point up, and there we go. Look at this, right? So when it points up, that's where the longer term. The longer term has been up since last year, right? But that's where the short-term trend turned up as well, and up a bit more up, and now you can see that the short-term trend has started to flatten out. Look at the green line. Look at the green line, right? It's just started to kind of like flatten out. It just means a bit of a sideways consolidation for now, all right, in terms of this range. All right, so let me just go ahead to draw some support and resistance. So I would say that 43, right? 43 would be a support level over the past 2 months that we have been holding quite well above, right? 43, maybe all the way to that $45.50, something like this, right? $45.50. So you can see 45.50 seems to be a resistance. You can see we neared it, came back down, neared it, came back down. In fact, today we actually attempted to break this 45.50 resistance level. All right, so I think overall the longer term trend is up, the short term trend is sideways, and let me just go ahead to turn on these bullish signals right over here. So you can see we have a bullish signal. Why do we even have a bullish signal coming out? Well, let me just go ahead to turn this off, and you can see that I can turn on this trailing support and resistance, right? So you can see this is a trailing support. What is a trailing support? You can see this is green line, all right? It's a trailing support, like the name sounds, right? It trails and follows the price as it moves higher. So you can see, right? So when DBS in October, we were like around $38. We got a bullish signal, and the trailing support pops up, right? Follow, and it goes higher, all right? One fine day, you can see a bearish signal came out because we broke below this trailing support level. So once we go below the trailing support, not so good, because this trailing support is kind of like an, giving it breathing space for the stock to move even higher. It accounts for volatility as well. So if we stay above the trailing support, we are not too bad, right? Not too bad. It's quite bullish still. Of course, if the green line continues to point up, even better. That's another confirmation, right? But once we go below the trailing support, then you might see a bit of weakness. Maybe some selling is coming back. All right. So you can see over the past 1 day, right? In fact, just today, right? We got this trailing resistance coming out since like about 2-3 weeks back. And why do we even have a bullish signal? Well, you can see that we actually attempted to go, in fact, we close above this trailing resistance level. All right, so that's a little bit of a bullish move. All right, a little bit of a bullish move. In fact, at least we are trying to find a new high. We've gone above this trailing resistance. All right, but the point here is that today, all right, we actually went to a high of around 46.50, and this is what we call a bearish candle. That means the sellers came back and pushed it down, and we closed, go past the opening price and went down. That's the reason why the bar is red in color. All right, and we saw some selling coming up. But when you look at it in the morning, right, it was actually a green. This is a bit more advanced stuff. It was actually a green bar, with a high of 46.50. Around there, but sellers came back and pushed it all the way down. So this means a bit of selling is coming back. Even though we attempted to break the high, but sellers are coming back to push it near the day low, all right, near the day low, even below the opening price. So there's some selling pressure coming in. So I would say that for DBS, you might want to put it in your watch list, all right, because we want to wait for a few more confirmation. So what could be the few more confirmations that we want to look out for? Right. So first thing first, we got a bullish signal. So that's a good thing, right? We attempted to break a new high. That's a good thing, right? The longer term trend, all right, is up. Look at the red and blue, as I say, it's been up since last year. So this is quite easy, it's been up. So we got about two confirmations, right? Two confirmations. But what are other confirmations that we want to have that can show that, well, we are really starting to see that reversal move, something like what we saw over here, like this, right? Pump, and then it starts to move all the way up when we got bullish signals. Well, we want to see the green 20 days moving average line. All right, look at this, right? So you can see the green 20 days moving average line was down, flat, and it started to point up, all right, after getting a bullish signal. So what we can see right now is that this green line, all right, what do you guys think? Is the green line up, down, or flat? Let me know, guys, in chat. What do you guys think about this green line? Nothing, there's no need to bluff yourself, right? What do you guys think about the green line? Is it moving up or down or flat, right, based on this green line? Is it up, down, or flat? What do you guys think? Type in the chat, type in chat. All right, flat. Thanks, Pao Shen. Thanks, Kim Wee, Zainuddin. Exactly, all right. So this green line is flat. This is the 20 days moving average that kind of like represents the short-term trend. So the long-term trend is up, no problem, right? But the short-term trend is still sideways, right? But what if it were to stay above that $45? So it's only today, only one day, right? So we need maybe a few more days, but if we can stay above 45, like tomorrow we go to 45.50 or 45.60, we stay above 45, right? Then this green line will eventually start to turn up. Does it make sense? Right? And when that happens, that would be another confirmation whereby we have got a bullish signal, the short-term trend start to turn up as well. All right, that will be another confirmation of more upside, right? And when that happens, great, right? Okay, let me just going to turn this off. Where could we potentially head to? Well, that's where we can draw another resistance line right over here. So I think maybe like 45 would be a new support level. All right, 45 would be a new support level. You can stay above that 45, right? As I say, go to 45.50, 45 something, right? The green line points up. I think targets could be revised higher, maybe all the way. Let's just say about $48. That could be the next target, right? Anything near 45 all the way towards that 47 to that 48 kind of resistance, whereby we may see a bit of a profit taking coming back. So that is DBS, right? I think it looks okay. It looks okay. We did a bit more confirmation today. We got a bearish candle coming out. But the fact is that we're still above 45. But if we can hold above it a few more days, we see the green 20 days moving average line pointing up. I think all that could be more confirmation that, this, like what we've seen over here. Look at this, pump, up, right? Pump, up. Wow, look at this, something like this. Look at this, right? Pump, right? And you got 20 days moving average line pointing up. That's it, right? You got all the confirmations needed, and there we go. So right now, we are just there. We got one confirmation, maybe two. If we can have 3 or 4, even better. All right, that's where I would say that could be a potential trade entry. The reversal to the next higher phase, whereby targets can be raised, could play out even more clearly. All right, so that is pretty much the quick analysis for DBS. I hope you guys got some value here. So let me just go ahead to pass on the mic to Jamie, right? Based on this analysis, let's say if you're to get in maybe near $45, let's assume, let's just pretend that, the next few days is holding above 45, we go to 45.50, 45.60, and we hold above 45, and we take a position near 45, could be 45.20 or 30, all right? And we get in, all right, based on the warrant, and it hits our target maybe near $48. What could happen, right? What's the potential, ROI that we could get, right, just by getting in on the warrant, right, compared to if you were to buy the underlying stock. So let's assume that you get in near 45, and you maybe take some profit near $48. Well, you'll be about 5.7%. All right, 5.7%. But what about warrants? Would it be 5.7? Would it be 6? Would it be 8? That's where Jamie will go ahead to explain. All right.
I
Okay,
have the answer for you, Joey, and to our viewers. So what can happen if you traded a warrants? Of course, if you bought the shares directly, that's great. But at $45, DBS does require quite a bit of capital upfront. Even if you were very bullish and keen to participate. So one alternative is to use warrants, because as I explained, warrants are a means or a way or tool for you to magnify your returns based on your view in the shares, right? So again, if you assume that you thought 45 was a good level to enter, well, today it actually shot up 3.9%, well above $45, right? But as Joey said, it's only day one. We're looking for more confirmation. But next few days, you are quite certain and continue to hold above $45. In fact, it keeps climbing higher towards $46. What can you do? How do you select a warrant? Well, we have a tool just for that and can be found at warrants.com.sg. So you might want to note that down. You might want to bookmark it, especially if you're keen to explore warrants, because it's got tools such as what we call the warrant calculator, which will tell you exactly what the price of the warrant will be, and the kind of percentage gains you can hope for and aspire towards if your view was to get in around 45 and to get out at 48. So first of all, under warrant calculator, you have to select your underlying. In this case, you can type in DBS. How do you select which call warrant to pick? We'll always say generally speaking, right, oil constant, it's always best to pick the longest dated. In this case, something that expires July 28th. Of course, you can always pick something that expires in June as well. Okay, so if we chose this warrant, what you would see is right now, or at least as of closing at 5 o'clock, actually closed at 5.4 cents. So rather than $45 or $45.38 where DBS closed, in order to participate in the performance of DBS and get in on the price action, you only need to pay a fraction of this, literally 5.4 cents only. Okay, let's have a look at how it would perform. So, we're over 10th of Feb. And if we wanted to enter, say, tomorrow, we can change this to 11th of February. Let's assume it continues to hold above $45. It heads towards $46. And that confirms for you personally your entry price. Now, if that's the case, the warrant will now go up to 6.4 cents from 5.4 cents. Why? Because the stock has gone higher. So the call warrant in this case, will also track it higher to 6.4 cents. Now, what can we expect if DBS goes to $48, which is, the next resistance, and therefore we kind of want to take our profits and have a look and wait and see, to see if it will continue going higher. If that's the case, after taking a profit, we can always go in again. But for those of us who are a bit more cautious about resistance levels, as we know, trending stocks, they will always hit a short-term resistance, come down before going up. So we want to take our profits at those very clear-cut resistance levels. In this case, you type in $48 because that's your target exit price, right? It's your price target to exit. With warrants, you trade in and out of it. You don't just buy and hold, right? Because with the shares, you're going to trade in and out of it anyway. You're going to exit at $48. So you do the same for warrants. In this case, if that happened on the day itself, up 4.3%, you're obviously going to make, net profit of close to 9 times, about 39%. Some of you are saying, they're thinking,